Hello, traders. I'm your host, Cousin Vinny, coming to you from theclosingprint.com, May 14th, 2023. In this edition of your weekend video newsletter, we'll discuss the indices, all of which closed pretty much flat last week, as worries over a recession and a downturn in consumer sentiment set us up for more sideways action into May OPEX. There you go. Starting off the week, we do have most of our indicators either neutral or bearish at 9 each, with 2 bullish and only half of sectors performing well. Most have retreated and breadth has deteriorated. So we're looking for a change in direction, but anticipate sideways price action and a pin near 41.50 for this week's OPEX. We do have some stocks that are set up going into the week that have probabilities of following through. That said, Michigan consumer sentiment is weighing on the markets as thoughts of a recession potentially also keep institutions and investors at bay as we look for a catalyst to break us out of this sideways action that we saw all of last week. S&P 500 support is at 4,100 and resistance at 4,150 and 4,200 into Monday trading. Some bright spots in the markets with the New York Stock Exchange monthly time frame show in the Kopach curve, which dipped below zero and is now turning, similar to previous actions noted with the green arrows, which adds to our bullish indicators this week. In addition, the S&P 500 shows its rate of change indicator relative to the CRB index turning higher, similar to previous occasions where in 2009 that led to a follow-through, despite the thoughts of recession and a overall bearish consumer sentiment number on Friday. And with the turn in these oscillators, we're watching closely going into May OPEX for any catalyst that could help break us out of the sideways range that we were in last week. That has us thinking that we could see a pin 12% below the all-time highs and that JP Morgan short collar strike at 43.20. We're watching very closely as price action most likely will continue to move sideways into Friday OPEX. That said, there were some noteworthy divergences in the growth and value area where growth was managing to stay above a ascending 21 EMA, with most value sectors moving lower or sideways. The lack of positive breadth is also holding the markets back. You can see that the S&P 500 just below zero, mid caps, small caps, and the NASDAQ, which is outperforming a little bit with the heavy tech-weighted indices moving higher on the back of strength in those 15 big cap tech names that are currently holding the market up despite negative sentiment. In addition, small cap advanced decline is lagging while the S&P 500 and mid caps stay above their 200 period moving averages. We've just been moving sideways, so breadth really hasn't been participating, and a reason to be more cautious going into OPEX this week until we get some sort of catalyst that can break us out of this range. Until then, we'll stay more cautious and we'll let you know during the live sessions whether or not we see reasons to believe that we could break out above 4,200 in the short term. In addition, NIMO and NAMO, the black line, is continuing lower, so that's a headwind for U.S. equities as the majority of stocks are not participating. Finally, with VIX at market lows that we haven't seen since October of last year, there is a strong possibility this could pop, so that's another reason to be more cautious in the face of that University of Michigan consumer sentiment number that dropped very rapidly last week, along with copper, which is currently forecasting a slowdown in the economy. With the economy potentially heading towards a recession. You would think the bond stock ratio would be moving higher right now. Bonds are neutral, moving sideways. No signal here. Along with high yield corporate and junk bonds, those are moving sideways as well. No signal, neutral. We have the CRB index continuing to fade while gold remains at recent highs. That said, there is some relief in the crude oil space. We did have West Texas and Brent crude moving lower along with gasoline last week as summer driving season picks up. We also saw the US dollar reversing off the lows pretty markedly on Thursday and Friday, so that could be a headwind for US equities this week. Keep an eye on the US dollar as we start to rally, potentially get back to the 200 period moving average overhead at 105. By the looks of it, an area where you might consider a hedge in something like UUP, which follows the US dollar as well, the Deutsche Bank US dollar bullish fund. Look for a push higher this week as a potential hedge. Sectors are changing to mostly yellows and oranges. That's a caution signal in the short term. We also have international markets pulling back somewhat. Keep an eye on the South American countries. In particular, I'd be focused on Brazil, which broke out of a pattern last week on 1 month base on heavy volume. The EWZ offers an 11.85% yield. MACD is giving you a positive crossover. Buyers may want to wait for a pullback to around $29 for a better entry. For the most part, this looks like it's going to follow through. Keep an eye on EWZ and some of the South American countries, which look pretty strong in face of a potential recession in the U.S. U.S. spider sectors, communications, technology, consumer staples, utilities are all at the 21-day or higher. So they're showing relative strength while the rest of the sectors show that bearish divergence in breadth. So we're looking for follow through in those sectors. So if you're looking to trade this week, keep an eye on communications, technology, and consumer staples as they offer relative strength. For the most part, the IBD 50 stocks are trending. The ones that I'm interested in trading, like AJ Gallagher, continues to trend. The problem is stochastics is embedded above 80, showing that strength. So there are potential obstacles and potential for these to pull back to the 21-day or the 9 EMA in the short term. That said, we are looking for stocks that are trending. We're also keeping an eye on economically sensitive stocks like semiconductors, AVGO, looks like it might continue higher as well this week. Centos, which is economically sensitive, it has 1 million customers worldwide. It markets and sells corporate identity programs and uniforms. So when this is moving higher, that's usually pretty bullish. So we'll see if that continues this week. Copart is also trending along a rising 21 EMA. Dynatrace making new highs, lots of volume in the preceding week. Gave us an indication that this would follow through. It's also on the IBD swing trader list, higher for another week. Fortress Transportation and Infrastructure looks pretty good. It's forming a base, looking for a breakout above 28. Stochastics turning higher. We just need to see more volume like we had at the end of April. Looking for Fortress FTAI to follow through and break out above 29 on Monday or Tuesday. Flywire has been on the IBD 50 for several weeks now, still moving sideways, looking for a break above 30, 31. Intracellular, another stock trending along its rising 21 EMA, looking for a follow through there. Lantheus Medical Devices looking for a follow through as it trends above its rising 21 EMA, right below that 100 level. Li Auto rose last week on Tiger Securities upgrading of its price target to 35 from 30. Morgan Stanley also raised its price target on Li Auto, so we'll look for a follow through this week in some of these EV names. Other stocks trending, pretty obvious. Rollins, rising 21 EMA, Pulte Group, A lot of the home builders look very strong, continue to move higher on lack of inventory. Despite a pullback in interest rates, they're still pretty elevated. Rambus, big base. We're looking for a Rambus to break out. Stochastics rising. Volume picked up on Wednesday, Thursday, Friday. Ryanair, looking for a breakout. It ordered 300 planes from Boeing. Management sees bullish indications for the markets going forward. Shockwave still trending, looking for a retest of the 21-day and potential follow-through. Salesforce also trending after earnings. This one continues to press higher, drop back to the 21-day that got bought. We continue to rise and base out in the most recent 6 weeks. Now we're starting to break out, looking for a follow-through. And Salesforce, CRM. Vertex Pharmaceuticals continues to trend along with Wingstop, continuing along its 21 EMA. With stochastics turning, volume starting to pick up again, looking for a retest at that 220 level. Many of the stocks in the food and beverages industry group were rising last week. McDonald's, Wendy's also looks pretty strong. With Wendy's posting better than expected numbers, we had volume come in, MACD's above its signal line, and we're breaking out of a 6-month base. McDonald's also trending, currently consolidating recent gains after the company beat in its most recent report. Revenue growing, the company beating by 30 cents, looking for a continuation at some point, but indicating there is strength in this group and most likely we'll see a follow-through. You can see Wingstop continues to move higher, along with Shake Shack and other stocks in the group. Jack in the Box trending, riding along its rising 9, 21, and 50-day moving averages. Look for Jack in the Box to continue higher, along with Wendy's and McDonald's. A number of other exceptional stocks, Celsius Holdings from previous watch lists, continue to break higher. DraftKings still consolidating into the summer after earnings pop, consolidating, looking for a follow-through. Another look at Fortress Aviation, trending, currently basing, looking for a breakout above 30. A lot of energy stocks breaking higher last week. Fluence Energy, NRG also bouncing, looking for a follow-through. Nextra Energy also bouncing. In addition to some of the smaller cap, like Southwestern Energy, looks like it's forming a base, looking for a break to the upside and a change in direction for a trend into the summer and the fall. Some of the consumer staple stocks like Hershey's following through. Procter & Gamble also looks pretty strong last week. PG, with both Hershey's and Procter & Gamble trending along its rising 9 and 21-day moving average, 50 days just below. And all four are stacked, 9, 21, 50, and 200-day. Looking for a breakout this week in Procter & Gamble, with a similar looking chart in Coca-Cola, looking for a breakout. As the consumer staples sector leads, that's defensive. Keep an eye on this one. This is a good hedge as well. If this starts to break out, that means institutions are positioning defensively into the summer months and a potential slowdown. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com. Happy Mother's Day to all of you out there. I will send out a watch list around 11:30, 12 o'clock on the East Coast, around 9 o'clock on the West Coast, so be sure to check your inbox for that. Otherwise, enjoy the rest of your day. Take care, and we'll talk to you soon. Ciao.